everyone, I'm Sandy Franks and you're watching Stock Breakthroughs on TaipanFinancialNews.com. As you know, at Stock Breakthroughs, our goal is to bring you innovative investment opportunities with tremendous profit potential. By tremendous profit potential, we mean double and triple digit gains. But hold on, just because we're on the hunt for extraordinary profit potential doesn't mean we give up on safety. We don't mean for you to be frivolous with your investment dollars. So while we like profits, we also like comfortable profits. My guest today has found that perfect mix of safety and profits. Joining me now is Ann Sosnowski, editor of Diligent Investor. Ann, thanks for joining us.
Thanks, Sandy.
Now, Ann, before you give us the specifics on the company that you found, can you give our viewers a sense of how you screen for these companies?
Absolutely. I like to focus on mid-cap stocks so that there's good growth potential, but there's also a good history of profits and strong management. Now, on a monthly basis, I research the basic trends of our financial times, both globally and homegrown, and then I try to find a different spin on which to play them. Now, in my opinion, large cap stocks are good for only dividend payments. I like not only value stocks, but growth stocks. Now, I also like to keep a well-balanced portfolio of conservative and moderately risky investments. Along with mid-cap stocks, which I consider conservative, we'll recommend some IPO stocks or some smaller cap stocks that have low entry points and steady growth. That way, we can capitalize on news-driven events on one hand and then hold some investments that rise with the general market.
So it sounds like a good mix then of a variety of different companies that come through on your screening.
Absolutely.
And then after you're done your screening, you narrow it down to such as the one that you found today, which is related to mergers and acquisitions, correct?
Yes, it is, absolutely. Now, one of the trends that I'm actually watching right now globally and in America is merger and acquisition activity. Now, last year, the total global value of mergers and acquisitions was about $4 trillion, which is about $500 million more than the $3.5 trillion total that was completed in 2000. Now, interestingly enough, we're only 2 full months into 2007, and global merger and acquisition activity is up 16% compared to this time last year. Deals totaling about $610 billion have already been announced.
That's incredible amounts of money we're talking.
It is.
What accounts for this huge increase in mergers and acquisitions?
Well, for many years before, we've seen companies that grow their profits through organic growth, or what is known as their own business activity. Now you're seeing older companies become new again by entering different sectors of business. It also decreases some of the industry competition.
So what company are you recommending that your readers take advantage of through the M&A activity?
Well, right now I'm extremely bullish on a company called Almost Family. And it's actually proven its worth through careful and smart acquisition activity. Now, the company is Almost Family Inc. The ticker is AFAM. It's on the NASDAQ, and it's a home health care company. Now, I believe it's a surefire winner as baby boomers and their parents age in place instead of entering nursing homes or assisted living as their great-grandparents or grandparents did. Now, late last year, I recommended this stock to some of my subscribers, and in only 6 months, the stock had moved 81%. Then the stock split 2 for 1.
And because of that stock split, could that be interpreted as a bullish indicator?
Absolutely. The fact that this stock split is an intensely bullish signal, it shows me that by issuing more shares and dropping the price of the stock, the company's management sees plenty of potential for the company in the future.
So why this company over other healthcare companies?
Well, let me tell you the story about this as being one of my favorite M&A stocks. Now, Almost Family is based in Louisville, Kentucky, and was formerly known as Care Tenders Health Corps. In 2003, the company started slowly buying up independent home health companies. From 2003 to the end of 2005, Almost Family bought 4 independent home health care providers. The company started growing this segment of its business inorganically at a very slow pace, so it could determine how positive these acquisitions would be to the bottom line.
Now, earlier at the beginning of the conversation, you mentioned a term of inorganic growth. What do you mean by that exactly?
Well, inorganic growth is created through merger and acquisition activities primarily. Sometimes older companies get extremely stuck in their current businesses and they have to branch out to make more profits and to change with the times. So it makes a company that wasn't so exciting before extremely intriguing when they enter new types of business.
Okay, let's stop here for a second and talk about the company's cash flow position. Do they have any cash on hand?
Oh, they have a lot of cash on hand. They actually have 4 times as much cash in pocket as they do in debt. And acquisition activity has actually helped their cash position immensely. Now, in 2006 alone, the company acquired 2 home healthcare service providers that added $3.5 million alone to their operating revenue. And that's a lot considering it's only a $120 million company.
That's a lot there. Is the company still acquiring other businesses, or are they stopping that?
Oh, it is. Actually, in January 2007, the company made another announcement that it acquired Jacksonville-based Baycare Home Care's home health agency. Now, all in all, the company has acquired 9 home healthcare companies in less than 3 years. The main reason behind the company's 81% move before its 2-for-1 stock split.
Is it at all possible, Ian, that the company will slow down with its acquisitions?
From what I read, the CEO, his name is William Yarmouth, has actually no intention to slow down the acquisition process. In fact, I would anticipate that he speeds it up. Now, independent home healthcare companies and small little operations around the country are a dime a dozen. So I do anticipate them continuing to branch into the Florida market, where they focus much of their acquisition activity, as well as New Mexico and Nevada, and in that region, which has a higher amount of older American citizens. Now, the company has $5.1 million in cash to play around with, and no doubt this will be used for continuing acquisitions.
Well, we've talked about the company's cash on hand, but let's talk about the other financials, such as earnings and growth and its share price. What can you tell us about that?
Well, the company's financials are also very strong. The fundamentals are essential when you're looking for a good M&A stock, because you want them to be in a position of strength when they're acquiring other companies. Now, for the fiscal year 2006, earnings for Almost Family came in 67% over 2005 at about 80 cents per share. Now, its year-over-year revenue growth is extremely strong at 25%. Most importantly, Sandy, this company is still considered a microcap, so it has a lot of profit potential down the road as it rides the baby boomer trend. Now, it's getting the thumbs up from the NASDAQ as it moved the company to the top tier of its global market for higher liquidity and trading. AFAM has met the strong financial requirements and corporate governance standards for this move. This investment is absolutely a good balance of risk and reward. Since it's already split its stock and returned 81% gains, it's proven that it's strong, and shareholders that know about it love it. Even though it's a microcap company, it's going to run on the coattails of merger and acquisition activity, which is increasing at a rapid rate. As far as AFAM's chart technicals, it's in its first rising move since what I call the flat trading characteristic of a stock split. Now, the stock has moved from $20 to $25 per share, a gain of 25% after just announcing its earnings a week ago. These kind of quick moves are sure money makers for investors who want to get in on some merger and acquisition activity, as well as a small microcap company that has unlimited growth potential and works off of the baby boomer trend.
But Ann, couldn't these bursts in share price that you mentioned, couldn't they be interpreted as unsustainable? In other words, the company may not be able to continue this kind of upward surge.
Well, as I said, I think the stock split really bodes well for the company. And now that it's at the top tier of the NASDAQ, it has much more liquidity and will attract more investors. At $25 per share, it's a perfect value and could easily return 100% in the next 2 years as it continues to acquire companies in areas of the country with a higher population of aging Americans. Now, I absolutely recommend buying shares of Almost Family Inc. The ticker is AFAM, and it's on the NASDAQ at its current price.
Now, I know that you've been doing the research in the merger and acquisition area, and you found this company. Are there others, or this is it for you? This is the one big company?
Well, I'm definitely following merger and acquisition activity extremely close. I'm focusing on 3 different aspects of merger and acquisition activity. A company that makes the M&A deals happen, a company that is buying up other companies, just like Almost Family, and a company that is a definite acquisition target. Now, I will be releasing these 3 stock investments that will profit on increased merger and acquisition activity in the coming weeks to diligent investor subscribers only. So if you want to have first access to them, you can visit and learn more about our past stock picks, how well they've performed, and you yourself can become a diligent investor subscriber and get first access to these special reports.
Well, we love profits, Ann, and it sounds like these companies are going to return it. It's great information, and I'm sure viewers will take you up on your offer to get your report to learn about the other stocks that you're researching.
Thank you, Sandy.
As Ann says, she'll have a report available in a few weeks, so please visit TaipanFinancialNews.com to sign up for Diligent Investor and be the first to receive her special reports. Thank you for watching Stock Breakthroughs. I'll see you again next week. Until then, here's to great profits from smart investing.